So let's look at the higher time frame key levels. Using a higher time frame key level to validate the CRT high and low will raise your win rate. When looking for your CRT range, spot the higher time frame key levels below or above the CRT high and the CRT low. Let me help you guys on finding the key levels. Your key levels will always come from the higher time frame, not any random higher time frame. A lot of traders may be getting confused here. If you're on a 1 hour chart, you're not going to be looking for a level coming from the monthly chart. For example, here is the key. When you want to find your higher time frame key levels, remember the division by 4 rule. Divide by 4. What does this mean? If you have a higher time frame key level coming from the 1 hour, your CRT will form on the 15 minute. So let's reverse it. If you have a CRT forming on the 15 minute, your key level will come from the 1 hour. 15 times 4, or 1 hour divided by 4, is 15 minutes. You can also use the 4 hour. If you're looking at a CRT on the 1 hour, the key level will come from the 4 hour or the daily. If you're on a 4 hour time frame and you're looking at a CRT range, the key level will come from a daily chart or a weekly. If you're on the daily chart and you're looking at a CRT range, the key level will come from a weekly chart or a monthly. If you're on the weekly chart looking at a CRT range, the key level will come from a monthly chart or a yearly. We want to see explosive movement when key levels are hit. We do not want to see price quote unquote chilling at key levels. Remember, divide by 4. If you ever forget this, just keep in mind divide by 4. If you're on a monthly chart, the month divided by 4 is weekly because there's 4 weeks in a month. If you're on a weekly chart, key level divided by 4, daily. If you're on the daily, divided by 4, 4 hour. If you're on the 4 hour, divided by 4, 1 hour. 1 hour divided by 4, 15 minutes. Here's a perfect example. So this example entails a higher time frame key level within the lower time frame CRT. Not below, not above, but within. Understand this. This is a 15-minute chart. The key level is coming from an hourly chart. CRT high, CRT low, key level hit, range formed. We soup the range low, coming back above the key level, exploding above. As soon as price closed above the key level, price expanded above with speed, targeting the CRT high. This key level right here within the lower time frame CRT makes this CRT very high probable. Longs over here would have been amazing. So as I mentioned before, the key level came from the 1 hour chart. We turtle soup the low, heading higher. This is the 15-minute chart. Zooming in, as we can see, the CRT high and low, key level within the lower time frame CRT. Turtle soup, wick below, bullish, entry long towards the opposing end of the range. Remember the rule, divide by 4. If the higher time frame key level is coming from the 1 hour chart, the CRT will be on the 15-minute. Let's look for the entry. Now we're on the 1 minute. Why are we on the 1 minute? because the CRT formed on the 15-minute chart. So if you see a CRT form on a 15-minute chart, you want to use the 1-minute chart for your entries. This right here is sauce. This is basically going to help you align your charts to enter your trades properly. Right here you can see a purge of the a purge of the CRT low. As soon as we closed above, that is the change in state of delivery. This is the validation of the order block. Why is this an order block? A thick down close candle touching the key level number 1 and tapping the CRT low. Close above, entry on the tap, long towards the opposing end of the CRT range. Very high R to R trade. So now let's take a look at an example of a CRT with a higher time frame key level below or above the CRT. So as you can see right here, we have the CRT coming from the 1 hour. The key level will come from a 4-hour chart. Key level below the CRT low. As soon as we soup the CRT low, we're going to hit that key level. This represents a high probability trade. Then we target the opposing end of the 1 hour range. So as I mentioned before, if the CRT is on the 1 hour, the key level is going to come from the 4-hour chart. Having a key level below or above or within your CRT from a lower time frame is key to achieving a high amount of success with CRT. This is what presents high probability CRT setups. They are not random. If your CRTs are not working when you're trying to execute, it is because you are not using key levels. So let's look down to the 5-minute chart for entries. Why? Because the CRT comes from the 1 hour. So if your CRT range is on the 1 hour chart, we're going to use the 5-minute chart for our entries. Write this down. Order block formed. How is this an order block? A thick down close candle tapping the CRT low as well as the key level turtle soup. Close above the order block, change in state of delivery. Tapping back into the order block, entry, long targeting where the 50% of the range as well as the opposing end. Using key levels will help you determine where the specific lows of the turtle soups will form.